Hey folks, Dan Frio here with your market update for April 14th, 2025. So we're going to talk about today in detail are tariffs and a recession, because everybody now is saying a recession's on the horizon because of these tariff wars. But we had some good news coming in today. Looks like President Trump made a little bit of tweaks to those tariffs. So we're going to see market reactions to those and more. So in today's video, we're going to talk tariffs, and if it pushes us into a recession, what does that mean for real estate? So without further ado, let's get to it. So my name is Dan Frio. I do this report actually 2 times a day, help you understand the markets, what's going on behind the scenes. We focus in on real estate because I'm actually a mortgage loan officer. I'm federally licensed because I work at a federal bank. And our slogan here is one application, one credit pool. We're going to shop your loan to over 30 different lenders. Now, how's that possible? I'm going to give you all my information at the end of this video, so stay tuned for that. So here's what we're going to talk about in today's video. Why the stock market is up 300 points. You're going to see that right through here. Dow Jones is up, well, now it's almost up 500 points. We got all the way across the board. You have the equities up. And then the nice thing is we also have the MBS market up quite a bit, up 42 ticks. It means mortgage rates are going to go below 7% today. So let's dive into what's going on behind the scenes. So you go to the economic calendar and there's really nothing out this week. We have Monday, nothing. Tuesday, nothing. Wednesday's retail sales. Thursday's initial jobless claims, and the markets are closed on Friday. So let's look over to what everybody's talking about right now in the markets. It's recession, 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 and more recessions. Because why? Well, these tariffs are going to push us into a recession. So what actually happens during recession? Well, let's get over to here. Here's why I did this. There's a probability of a recession was high. Forecasters reached 100% for a previous year's for recession. Well, in 2023, there was a 100% chance from a lot of economists that there was going to be a recession. So let's dive in on this. And that's what you're seeing right through there on the screen. I just Googled it. 2023 recession odds. Okay. So now here's what you're starting to see. Recession, recession, and more recessions. Well, so what I did is I went over to ChatGPT. You guys know I love this thing. And I said, what happens? Well, let's go over here. What happens to interest rates in a recession, and provide examples? Then what happens with real estate during that same time frame? Okay, right over my head. I put that into ChatGPT. Let's do this while we're live. I'm going to copy that. Okay, and let's do this and copy, and let's go into DeepSeek. This is another AI system, and let's see what DeepSeek has to say, because I don't want to be biased to just one system. So let's get over to here, and this is the unique thing, and I did a video on this last night in regards to how you can use AI to actually help you invest. And check out that video. It was a live event I did on a Sunday afternoon, and I think you might find that a little intriguing. So let's get over to this. We're going to go into DeepSeek, and here's what it does. You plug in this information here, and it's checking out the data there. While it's doing that, let's get over to what ChatGPT had to say about this. So let's go through here. It says, I asked it, what does it do? So what happens during a recession in most cases? Well, interest rates usually fall. Okay, so that might be good news for homeowners and home buyers. During recessions, the Federal Reserve often lowers interest rates. We're looking at them doing that right now, making borrow cheaper and so forth. So let's get the historical examples of this. And I just put it in ChatGPT, so I'm not manipulating any numbers. So let's get over there. I'll get my head out of the way so you can see the entire screen. Here's what we're seeing. In 2001, we had the dot-com bust. Federal funds rate dropped from 6.5%. It's 4.25 right now in 2000 to 1% in 2003. Stimulated growth after the tech bubble. Okay, what happened in 2008? The housing crisis, the biggest housing crisis we ever had in history. And to learn that and to figure out what happened actually, you have to really dive into the details. But this was actually just brought about by subprime mortgages. Believe it or not, it almost took down the whole world. The Fed dropped interest rates from 5.25% to basically zero. Okay, rates stayed near zero for years. Then the 2020 COVID recession, Fed slashed rates. So Fed slashed rates, Fed dropped rates, Fed dropped rates. So in most cases, the Fed's going to drop rates. Now, did that cause housing markets to crash? Well, if you go down through here, what happened? House prices crashed during that Great Recession. Okay, why? It was the bubble bursting in that subprime mortgages. You saw Arizona over a 50% drop. So you're seeing a lot of people saying, oh, Arizona's back and Austin's going to lose 50%. Guys, I don't know if we're going to ever see house prices losing 50% again. This was a worldwide catastrophic event, but you never know what's going to happen. 2001, what happened? Real estate houses barely budged, barely dipped. Okay. 2020 recession boomed. So we had one where it crashed, and this is what everybody's talking about. Yeah, this one, which really did nothing. And then you had this one that just put home prices at astronomical prices. Well, let's get over to DeepSeek. See what it has to say with this. Let's see if the trends are there, because I don't want to manipulate this. You guys need to understand these markets and the news behind it and the facts behind it. So let's go back here. During recession, central banks typically lower rates to stimulate economic activities. However, the outcome for real estate prices vary depending on the recession cause, monetary policies response, and external factors. Go back through here. The Great Recession, 2007 to 8, 2009, interest rates went from 5.25% to 0. Real estate prices crashed. Key factors: the recession was directly linked to the housing market, exorbitant prices, and declining rates. But if you really dive into that, it was caused by the subprime mortgage crisis. In the 2020s, and interest rates, central bank basically brought it down to 0. What happened with real estate? Prices rose. 1990, let's see what happened. The Fed lowered interest rates from 8. Look at this. You guys keep saying, oh, well, you guys had it easy. We had 8% interest rates to 3. Okay, price stagnations, what real estate does. Prices stagnated and dipped modestly in many regions with delayed recoveries. Okay, so that's what happened. It didn't really crash. Early 80s, prices fell as high mortgage rates crushed demand. Housing started to drop 50% and so forth. So in the 80s, it was really bad. So it gives you more pieces of this puzzle to figure out things. So I'm going to go out on a limb and tell you what my expectations are and the thoughts behind it. I'm going to give you short-term, midterm, maybe some long-term trends on this. My thought is the Trump administration is going to negotiate with a lot of these countries, and we're starting to see China come to the forefront right now as well. That's the key pivot point. If you watch all mainstream media, I think there were 75 countries that already came to the White House, or at least reached out to the White House to try to figure out a compromise with all this. I think that's all that's being expected at this time. China's being a little bit, that we see in the news, a little giving us a pushback, which I get. Okay, so it's like if you've been giving something your whole life, you get after a while, you just expect it. So now when somebody says, no, we need to make this a little fair, you're like, no, well, yeah, okay. So I hope you see my point there, but we're going to see how this plays out. Short term, it's going to be volatile all over the map. 6, 7, 5 to 7% is where the rate's going to adjust. When I go out a little bit further out in that curve, let's go over to the CME Fed Watch tool real quick and see what the Fed actually is expected to do. So if we pull this up, you can go to the CME Fed Watch group. It's going to tell you in 23 days what the Federal Reserve is going to do. Well, let's see what their perspective is on all this. So if you scroll down with this, we'll look at the probability. I'll get my head out of the way once again. Let's look at the probability. So the probability now is at the May meeting, there's an 83% chance the Federal Reserve is going to do nothing. Okay. So if it was that bad out there, they would have an emergency meeting calling in, that's what was almost what took place last week when you had the markets just crashing. But right now they're saying Federal Reserve is going to hold steady right there. There is now a potential of maybe 2 or 3 rate cuts, one coming in June, one possibly coming in July. Don't really see that one coming, and maybe one coming in October. I don't really see one. I'm seeing one through the next couple months if the markets, determine that. But there's really not a lot of news. We're going to keep a focus on the employment numbers. As long as the employment numbers are staying in line, 150,000 or above with new jobs, you have wage growth, which is still between 3 and 6%, depending on if you were a job mover or not. So you have a healthy market there. We went the other day and looked at this consumer disposable income. It's still in a positive territory, folks. So we do have massive spending by some, but we still have the economy looking not pretty, as gloomy as a lot of people were predicting. So my expectations on a recession, don't think it's going to be coming. I think the tariffs are going to be short-termed. It's going to be a boom for our economy in the long run. Short-term, it's going to be crazy. Midterm, it's going to be, we're going to, maybe iron out some of these things. Long term, I think it's going to be good for us in 2026. 2025 is going to be a tough year. So if you're out there looking maybe to buy that first house, maybe you're looking to refinance, I'd love to help you. And here's why. Here's what we do. We have this slogan, one application, one credit pool. We're going to shop your loan over 30 different lenders. Here's how this benefits you. Let's say in this environment right now that we're seeing, let's get over to mortgage rates. Well, here's the bonds. So you go over to mortgage rates, and let's just go back to a month. And what you have to understand is when this market is going down, okay, when this chart's going down, interest rates are going up. Okay, there's a yin-yang effect. So right now, the MBS market is up 41 ticks. This means mortgage rates are going to come down pretty nicely. It'll be in the 6% range by the end of the day. So when you're looking over here, let's say, for example, if you lock down here, all right, you lock down here and then rates rallied. Let's say you lock down here, rates rallied. Okay, again, when this goes up, that means the rates are coming down. All these little orange bubbles, these are mortgage companies actually lowering their rates. So let's say you lock down here with your bank and then rates plummeted. What do? You're stuck. Okay, so what do you have to do now? Well, you got to go back on the phone and start calling around and putting in your application. Why don't you leave that up to us? If you just go to the rate update, if we locked in here, we can't, and the rates dropped over 0.25%, we can't renegotiate with that lender. Well, we might just pull that loan and move to another lender. Okay, it's something we don't really like to do and want to do, but this gives us the options to do just that. So if you want to check out how all this works, go to therateupdate.com. Here it is. If you're looking to buy, refinance, hopefully I can be your loan officer. Here's what we do. I work at a federal bank. That gives me a federal license through all the country. But the unique thing is we're also set up with 33 other lenders. So you have our lending, as well as 33 other banks that we can use their products, their interest rates, everything about them with their mortgage divisions. So how do you get involved with all this? Well, you work with me. Just go to therateupdate.com. I facilitate all this. It doesn't matter if you're using if we go through our bank or some other lender, you're going to facilitate it right through me. I have over 35 years of experience. I'd love to work with you. Go to therateupdate.com. There's many ways you can reach out to us. 1, right above my head, you can put in your application. 2, you can schedule consultation right up through here. 3, call. You just call right there. There's our 800 number. Or we just created this website. The cool thing about this is I put in 2 of our really nice YouTube videos that we have. This one is Home Buying 101. If you want to just learn about home buying and just check out, how do I check my credit all the way to how to put in the application and all the terminology throughout that whole process, check it out. If you're a current home owner, and you want me to track mortgage rates for you because you're like, the rates are all over the map. I never know if I should lock. Should I put in my application? What should I do? Well, put in your application. Let me monitor this for you. Tell me what interest rate you want. You're going to click right through here, put in those details. What will happen is when that rate hits your mark, I'll get you on the phone. We'll get the paperwork started. So go to therateupdate.com. Love to have you as a client. So that's what you do. Just go to therateupdate.com. Here's our new website. Hope you love it. There's a lot of tools here. Also mortgage calculators, even ones we use in our videos. So check it out. Other than that, hope to see you back here at the closing bell so you can understand what happened throughout the day and really understand why it happened. Take care, folks. God bless. Have a fantastic day. Bye-bye.